Hello, Billy Applehart here. Hey, thanks for joining the vlog. And also I want to tell you thank you for many of you that have been tuning in and actually reading the blog itself. And we have many questions coming in every month, really from all over the world. In fact, if you want to know how to follow the blog and in some cases the vlog here, you can go to billyapplehart.com. And so one of the things that I want to share, I have a couple of questions here that have been sent in. And one of them is actually from Hans. And he says, hello, Billy. My wife and I just bought a house in Colorado in June, so my daughter and her can go to Charis, which is a college, a Bible college in Woodland Park, Colorado. We'd like to get more involved in buying more property out there. And then he said, I thought on a second home you need 20% down, question mark. And then he asked another question, would it make sense to start an LLC? And if so, being that it's a business, can you put 5% down then? So the first thing that I want to say to you is that, Hans, it's a lot more favorable if you actually treat the second home as a second home in your case. By your question, it appears right now that would be your only investment type property. And so what I would encourage you to do is buy it literally as a second home and treat it as a second home on your taxes. And let me give you a couple of reasons for that. Number one is the financing for that home, if you're going to use financing, is much easier if you treat it as a second home. It's easier to actually get a loan and get more favorable terms on that loan if you treat it as a second home. The other advantage is that if it's treated as a second home, you actually get the capital gains exemption if you were to sell that house. So an example would be if you sold that house, and let's just say you made $100,000 on the house after 3 or 4 years. Let's say that turned out for you that way. Then basically under treating it as a second home would allow you to take that $100,000 for all practical purposes, basically tax-free. So that's the advantage, let's say, of a second home over, let's say, on an actual investment property, a rental property. If you were to sell that house as an investment property in 3 or 4 years and you were not using what we call a 1031 exchange, then you'd actually have to pay capital gains on that property, both for what we call, you have to recapture the gains that you depreciated, and then you would also have to recapture the gains you actually made, which can grow to quite large. Here's an example. Let's say you depreciated $3,000 a year, that's $12,000 over 4 years, and you made 100, that 100 plus 12 is 112,000. You got to pay taxes or capital gains taxes on 112,000. So for you, in your circumstance, number one, treating it as a second home would be advantageous. Your financing is better in that particular situation. And then secondly, in addition to that, I think in your case, the tax advantage is there. If your wife and daughter, if I understood the question right, are going to live there, the way the second home works is that you literally cannot rent it out more than 14 days a year. And so the good news is that you can rent it, but you can't do it more than 14 days. But your daughter and wife obviously can live in the house. So anyway, the second home is better. You do not need an LLC. Now, once you start doing investment properties, then we have a whole teaching on legal strategies and legal setups for how you should treat your investment portfolio. But right now, that's the best way to do it. So thanks for the question. I appreciate you writing into the vlogs and the blogs. Go to billyapplehart.com and we'll be glad to answer your questions. So thanks for tuning in. We'll see you later on another video.